Rebecca, are you hearing a kind of flurry of excitement again for the US, or?
For the, yeah, I mean, yes, valuation is important, but it really is earnings growth that drives wealth creation over time. And, there's a stat that you could have paid 600 times earnings for Apple just when the iPhone had been announced, the development of the iPhone had been announced, and you would have kept up with the S&P 500, even the S&P 500, over the period since. So, yeah, do be aware of valuation, but if a company is really well positioned and it's innovating and it's growing, then I mean, Nvidia is obviously the name at the moment, but their earnings growth is just projected to be insane. It's just so well positioned, and you may balk at the valuation to a certain extent, but do you think this company is really going to drive earnings over the longer term? And that's what we're trying to focus on when selecting stocks. And it's these technology businesses, yes, they're expensive, yes, they're US listed, but they're global companies. They have such a global reach, and the monopoly effect is just insane. You build this infrastructure, you lock people into that infrastructure, and the barriers to entry for incumbents is just, it's so terrifying. You wouldn't want to compete with Microsoft, you wouldn't want to compete with Apple. I mean, I'm just staggered at how quickly Apple Pay has become the go-to in terms of our payment network. It's these companies are generating cash already, and they're not paying it all out as dividends. They are innovating, and they are just improving their product, and they are locking more and more people into their infrastructure, and that's worth paying for.